John, after a couple of days discussing real estate in Spain, it would be great to get your thoughts on where you think we are in the real estate cycle.
Yeah, I think it was really interesting over the past few days. In some ways, I think we're really at a crossroads in Spain, in the sense that some of the obvious early wins for some of the big capital players, some of the big NPL trades, that's probably passed somewhat. There are still going to be significant NPL portfolios, so we're talking 200 billion euros, as we heard today at the conference. But I think they're going to be more efficiently priced. There's a cohort of players that have been buying those portfolios. They know how to underwrite them. Their advisors are there. They know how to close them. There are service providers that have been formed, and those service providers are now often owned by some of the major NPL buyers. So I think that part of the Spain opportunity, if you will, is now much more efficiently priced. However, and that's why we're really at a crossroads, in some ways it's just the beginning of the value-add opportunistic opportunity for individual assets, particularly smaller assets. And frankly, Spain is a market, and you look at Madrid and Barcelona, even the two largest cities, that is primarily filled with assets that are valued at, say, less than 75 million euros. Those are really just coming, many of them, to the market today. Most of them have not been managed through the whole crisis, either because the borrower was in dispute with their bank, or the asset went to the bank, or the borrower, the owner, didn't have any capital to do any CapEx work on the asset, or in any way improve the asset, lease it, etc. So those opportunities are going to run, in our view, for the next several years. And it's really just the first time that a volume of those opportunities, there have been one-off situations, and the volume has picked up. But when you think about 200 billion of REO and NPLs that have to be recapitalized and restructured, that's a significant volume of assets. And so that's what we're seeing in the marketplace and as a market observer. So that's a really important characteristic. I combine that with the fact that there's a dearth of real players that know how to use hands-on active asset management to turn some of those buildings around. And that provides an interesting competitive dynamic. If instead of Madrid and Barcelona, if you're in London or New York or Paris, literally you have 20, 30 players, operating partners or investors that can do that sort of value add, roll up your sleeves and get to work type execution. There aren't as many in Spain. Many of them went bankrupt through the crisis and are still dealing with some of their own issues. And so there's a real opportunity to come in and bring not only the capital, but the sort of expertise of leading those sort of processes to create value in the asset.
Do you think there'll be enough capital to handle these opportunities?
It's interesting. There's definitely capital, and there's, in some ways, probably enough capital to meet the opportunity. But again, when you think about the weight of the portfolios that are coming to market and how they will have to be turned, I think there's going to be a period in Spain where a number of players will start focusing on these granular asset opportunities, and that's really in the early innings of that process.
And I suppose now looking at Core and Core Plus, what are your views on the Spanish market in terms of Core and Core Plus?
Yeah, Core I think is pretty fully valued around the world today. It certainly has seen a compression of yields in Spain, particularly for prime office buildings, primarily in Madrid, but also Barcelona, and prime shopping centers anywhere in the country. And those yields have compressed significantly off the back of the weight of money and financing available for those types of assets. The spreads are probably still a little wide to their comparable global international gateway capital cities. But I think I have to leave to core investors to make the judgment of whether there's going to be another compression of yields to meet sort of global levels. But that trade, I would say, generally speaking, is over unless you are a core investor and you're willing to accept unlevered returns of 5% initial yields, well below 5% unlevered. I think on Core Plus it's different. I don't think we have seen either the wave of Core Plus investors yet. There are more coming in Spain, nor frankly have we had the assets available for them to buy. And so I think Core Plus is still pretty interesting, particularly when you think about Spain as a tale of two cities, meaning Madrid and Barcelona are clearly the gateway capital cities, but there are another 5 cities that are economically strong, have 500,000 to 1.5 million people. We're talking about, Valencia, Seville, Bilbao, for example, or Zaragoza from a logistics hub. They either have huge ports, big populations, strong economics in the case of Bilbao, and the core plus investor will find in those markets, really attractive returns, quality assets that don't need much work, and capturing rents that are still in the process of bottoming, and therefore, as the Spanish economy grows, should have some room for growth.
Looking ahead 12 to 18 months, what should we be expecting to see in Spain?
It's still an evolving story, but I go back to the fact that still limited competition relative to other markets for, again, those individual assets. I think that's really where the opportunity is. Investors that are willing to roll up their sleeves and work building by building. So that's one aspect. I think that limited competition combined with this volume of flow that has to happen because those assets or loans are in the wrong hands and are, need to get recapitalized. And I combine that with a country, Spain in 2015 should see north of 3.1% GDP growth. Job creation is up 3 or 4% this year. You have a lot of the economic ingredients that should create growth in the country, and indeed is creating growth in the country, with unemployment falling pretty dramatically, although obviously still quite high. Both exports and imports up significantly. And in real estate, you have to do 2 things. You have to both buy well and manage to create value. But it's also helpful if you're an economy that isn't flat or declining, but is actually growing so that you can lease and hopefully lease at higher rents. And Spain will be one of, if not the best performing economy this year and probably next year from an economic growth perspective. And I think that's a key ingredient in terms of what I think will happen looking forward over the next 12, 18 months.
Thank you very much, John.